Okay, hello, my name is Bailey Roehr, and I'm going to be going over a quick presentation just to outline and summarize everything I wrote about in my final paper. So I did mine on the company of Square and any financial and market risks that they're going to be facing in the near future or are currently facing, and then provide some solutions to those risks. So just a quick background, Square was founded in 2009 by Jack Dorsey and Jim McElvey. They're both St. Louis natives, which is very interesting and kind of why I initially wanted to look into this company. Their first product, it was just a simple little white cube that would go into phones' audio jacks, and it would allow retail operations like small mom and pop locations to take credit card as a form of payment. This was huge because it gives small brick and mortar stores the opportunity to take just another form of payment, especially now so many people carry credit cards and are not keeping a large amount of cash on them. Their first major deal was actually with Starbucks. In 2012, they struck an operating deal where Starbucks would use Square's point of sale system to in all of their locations. And this was great. It was huge for Square in building a little notoriety for its name and just some credibility. We would later find out that it was actually hurting Square's revenue. It cost too much to maintain the software systems that Starbucks was using when it comes to operating cost, as well as just the hardware cost of getting these devices, their bigger POS devices, in every store. But it wasn't a complete loss. It did hurt their valuation, but it definitely gave them a lot of brand recognition. So that was in 2012. It would end up making its debut on the New York Stock Exchange in 2015. They IPO'd with a stock price or share price of $9, giving them about a $2.9 billion valuation. This was actually almost half of what they were originally valued at, but because of that Starbucks deal, all of that information about how it was costing revenue came out right before their IPO, so it did bring the price down a little bit. Another interesting fact, I guess, is right when they were IPOing, CEO of Square, Jack Dorsey, was also named interim CEO of Twitter, where he had previously worked. And so there was a lot of unease in the market about whether someone so young, in his early 30s, maybe late 20s, could run two large tech companies like this. But we'll later see that he's perfectly capable of it. I mean, we look at Square now, their headquarters is in San Francisco. They employ over 3,000 individuals. And since they IPO'd, they've really focused on expanding their business model. They've broken out into Square Capital, which is a lending platform. They recently, I think it was in 2018 or 19, they got approval to become a certified lending firm. They've expanded their POS systems. If you can see it here, these are just different levels of POS systems depending on what a retail location thinks would best fit in their store. And they have their Cash App, which is their peer-to-peer transaction service, similar to PayPal's Venmo system. And through that Cash App now, they also have a trading platform where individuals can trade in stock as well as cryptocurrency, which was huge. And we'll see cryptocurrency has quickly grown to be a pretty big percentage of the revenue that Square has taken in. So for financials, their current market cap is up to $90 billion. When it started in 2015, it had a $2.9 billion market cap, and their share price is over $200. They do have a trailing 12-month gross profit of $1.9 billion, and their current ratio, this is just from the most recent quarter, so I believe that is the second quarter of 2020, is at 1.70. So this is good. It helps show that currently they're taking on a healthy amount of debt, and their liabilities are not overlapping they're not surpassing their assets as a company. You want to stay between 1.2 and 2 for a current ratio. So overall, they're pretty strong financially. And then in recent news, just in 2020, Square was approved to be an official relief lender for any of the coronavirus relief aid. So that was a huge deal for them. I mean, getting to continue to do business and get more deals, especially for a financial tech industry, is huge right now. And then when we looked at the ready ratio analysis, Square was hitting the mark on everything except for their debt ratio. They did have a high debt ratio, meaning they had way more liabilities than equity in their company. Well, not more, but they had a very high amount with 62.3%. And if we look at one of their major competitors, which is Intuit's QuickBooks, their debt ratio was at 40%. So that's just one of the threats we're going to look at. And so another one would be the market saturation. Square was first to the punch with these retail consumer transaction services, but a lot of other companies have joined in. We see Chase Bank, Clover is a very popular option. Intuit QuickBook, they have another card reader as well. And then with peer-to-peer transactions, PayPal's Venmo has really taken that industry by storm. And with market saturation, that's a huge threat, because then you're really going to be limited to the amount of growth that you can have, and it's going to really take a shot at your market share. So there's just less profitability in the market for individual firms. And then another one is just the need to diversify. As we talked about, Square's already worked a lot to expand its business models into lending, cryptocurrency, all of these. But if you can see, this large blue chunk of this graph was from 2019, and that's actually just their transaction services. That's the percentage of revenue that they have. So we can see that a large portion of the revenue that Square is taking in is still from its transaction services. And that just really tells us that they're not gaining a lot of ground with any of these areas they've expanded into, whether it's lending. Cryptocurrency, we can see here, has grown over the years, but it still doesn't, it pales in comparison to the money they're making from their transaction services. So some solutions to this, when it comes to market saturation, there's a couple methods in how to gain a competitive advantage. The three main methods are focusing on cost, focus, and differentiation. And with a cost focus, I don't think that that's the best choice for Square, mainly because right now we want them to focus on bringing their debt ratio a little bit more down. So they should really leave their costs where they're at. And then with focus, we don't want them to focus on any specific product, especially because right now their winners are the products and services that are in a really saturated market. So I think differentiation will be the best choice for them, and they should focus on outlining their strengths, running marketing campaigns that focus on how they have a full suite of platforms for retailers, and it's not just a simple card reader, but they also now have bank accounts for retailers and for consumers, as well as lending. They can give cash advances to retailers, which is a huge difference. And then as well as trading platforms for consumers, similar to Robinhood or TD Ameritrade. Now that Square has its own platform inside of its own mobile wallet, I think marketing that to consumers will be huge. And then another solution that we found is they can push more of its exposure for its consumer-facing products. So they have a lot of transaction services from retailers, but focusing on their peer-to-peer transactions, that's a relatively new industry. Venmo hasn't been around for all that long. And while Venmo has definitely passed Square when it comes to getting a hold of consumers' attention, I think that Square could definitely become a market leader in this. And so I know a lot of phones, like whether it's an Apple, they'll have Apple Pay or Samsung Pay and Google Pay. Those all come pre-downloaded, but one thing that Square can actually do is pay to have its apps, its Cash App listed higher and in the App Store, so it's one of the first things that users see. So I think that would really help. Here we can see that Cash App's user base right now is around 24 million, and Venmo is sitting at about 40 million. So they've got a long way to go, but I think that's something that Square should really focus on. So then, quick conclusion, their growth is unprecedented, starting at $9 a share just 5 years ago, up to $200 with a $90 million market cap. I think looking forward, the company already has a lot of name recognition. It just needs to make sure it maintains that competitive advantage. And I think that using a style of differentiation and setting itself aside from all of the competitors out there is really what Square's going to need to do in order to push some of its less popular products to diversify its income stream. And I think that's what it's really going to take for them to last in the long term. That's all I've got. Thank you.